Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in a few minutes. Just some housekeeping rules. This is being recorded. Everything we're going to do today is on our website. So we're going to also show you, we're going to dive deep into our bank statement program, but we're also going to show you how to navigate our website and the ease of use of it. And I'll introduce our subject matter experts here in about a minute and a half. And then we also have a guest appearance here from our EVP of Sales and Production. Tom Hutchens is going to give us a little bit of an overview of what he's seen in the marketplace. But we'll give it about another minute to a minute and a half. We still have a lot of people logging in. Thank you again for joining us. We really do appreciate it. And we'll get going here in a minute. Hope everyone's having a great day. I'm playing a little bit of a away game here today in Florida. So they've had some really nice storms the last couple of days. So I know, Javi, you're down in Miami. Have you been getting any of those?
Oh yeah, I came in strong. I think 2 days ago, my whole complex was flooded. Ankle deep.
Yeah. Oh God. Oh God.
Yeah.
'Tis the season.
Yeah. Exactly, Tom. Exactly.
Here's a fun fact. San Diego has gotten more rain year to date than Seattle.
That's got to be the first.
Yeah.
Yeah.
All right, guys, people still logging in. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep product dive into our bank statement program, everything from even from a 1003 credit report, everything you're going to need to know to make you an expert on our bank statement program. So, Tom, I'm going to introduce Tom Hutchens, our EVP of Sales and Production. Tom's going to give us a little bit of an overview of what's going on in the marketplace, maybe share some securitization information. So, Tom, welcome.
Hey, thanks for having me, John. And thanks everybody for attending. I'd say you're kind of taking the first step to learning more about non-QM and I guess specifically today about the bank statement business. But just a little bit of background about Angel Oak. For those that don't know, we've been doing non-QM specifically for, gosh, over 10 years now. Our origination volume is in excess of 17 billion. And we also have Angel Oak Capital, which is an affiliated company that is a big purchaser and, more importantly, securitizer of our loans. So we have a pretty good sense of what's happening in the investor world, and liquidity has always been a big part of non-QM. And it's we had to start it up. There was zero liquidity when we started this 10 years ago, but as we've grown it, we've seen tons of investor interest, and that continues to grow. And I'm just, we're our affiliate over at Angel Oak Capital is putting out, I believe it's over $1 billion in securitizations over the next week or two. So the market is good, the interest is high, so you're taking the right step. We've got lots of originators that have found a way, and I know you're very fortunate because you've got some great experts on the phone, certainly John, but the real experts are Javi and Eric, who are out there talking with customers day in and day out. And the one thing that I would say that really always differentiates Angel Oak, there's a big long list. I won't bore you with the list, but the quality and the expertise of our account executives is second to none. And Eric, you've been here since the beginning, so you've been here over 10 years, and that experience means so much, especially if it's one of the first non-QM loans you as an originator are trying to do. Having that experienced account executive that knows the products, knows the guidelines, knows the process, just knows this business inside and out will really help the loan process go smoothly, for it to close under the terms that the account executive said it would, and get it to the closing table quickly, so that then you can, and I'm sure these guys are going to talk about it more, how you then go out and market non-QM. And that's really the formula. Again, thanks for being here today, because you're kind of taking that first step. I don't know how many of you have actually originated a non-QM loan or a bank statement loan, but generally it's not the majority of a group. So thanks for being here, and I'll get out of the way so the smart people can take over from here.
Hey, thanks, Tom, for joining us. Appreciate it. And look forward to getting into our webinar here. So, hey, again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak. And as Tom mentioned, longevity, it just celebrated my 9th anniversary. So along with Eric, going on that decade. So everything we're going to do today, this is being recorded. Everything we're going to do today is off of our website. So I'm going to introduce our two, as Tom mentioned, our two subject matter experts. First, Javi Naranjo. Introduce yourself, Javi.
Hey everyone, my name is Javi Naranjo. I'm an inside sales account executive out of Miami. Been in Angel Oak for 2 years. In these 2 years, I've learned a lot, especially about the program we're going to cover today, our bread and butter. If you've never been in one of these webinars, I'm excited to tell you all about this program, and I can't wait.
Yeah, thank you. And probably the other subject matter expert doesn't need any introduction, but I'll do it anyway. Eric Morgenson. I always want to call him Eric Morgenson because he is everything about the mortgage business. So go ahead, Eric.
I tell you, John, I love this business. You guys love this business. What do we do out there, folks? We sell money. Think about it. No environmental issues. Nobody wants to return it. You never run out of it. We're money sellers. And with that said, how do we do that? Through often very complex loan scenarios. And here at Angel Oak, you guys, we're here that we love weird scenarios. We are the non-agency lender out there. So think about this market. What do you got? You got private money, and you have non-agency. That's the marketplace we're in right now. And the mag daddy of all non-agency loans is that in the alt income or the bank statement loan that we're going to jump into today.
Yeah, great. Thank you, Eric. And again, this is interactive. Please put your questions into that question queue. We really want to answer all your questions. If by chance we don't get to all your questions, your account executive will reach out to you no later than tomorrow morning. So, but before we get into this, we're going to launch a poll here. And it kind of comes back to what Tom mentioned earlier. Not sure how many of you have closed a non-QM loan, let alone a bank statement loan. So while all of you are voting here, just want to share with you some statistics. In 2020, new business applications grew by 24.7% over 2019. That was the largest increase in new business applications in over 10 years. And in 2021, new business applications grew by 22% over 2020. I know I threw a lot of numbers out there, but this is the largest, fastest growing segment of borrowers in the country, are self-employed borrowers filing for new business applications. So let's see the poll results here. So 75% of you have not originated a bank statement loan in the last 12 months, which is great. That's why you're here. As Tom mentioned, you're going to learn from two subject matter experts who will teach you everything you want to know. So let's get into it right now. So Eric, you're going to talk about our Bank Statement Elite program. I'm going to try to move a few things around here on my screen so I can get there. And Eric, give us some highlights of our Bank Statement Elite program. And let me make sure, can you guys all see that?
Yes.
Okay, great.
So the genesis behind, we have a regular bank statement loan, and now we have a Bank Statement Elite program. What's the difference? Well, over the past 10 years, we've been looking at all the bank statement loans we've been funding, and we noticed something. A lot of them fell into this perfect little box, meaning that this box had less risk. And you guys, the rates on all non-QM, it's all risk-based pricing, meaning the higher the LTV, the higher the risk, the higher the rate. The lower the FICO score, the higher the risk, the higher the rate. It's all risk-based pricing. But this little, getting back to this little box, boy, why are we putting all bank statement borrowers into the same type of category when this subgroup over here is a lot less risk? So with that said, we've lowered the interest rate to be extremely competitive for you guys out there in the street selling these programs. So we brought down the rate. It's just a strategy so we can actually sell more money. Now, the guidelines are a little bit higher of a hoop to jump through to qualify for a bank statement elite versus a regular bank statement loan. In our pricing engine, that requires no login, no password, no barrier to entry. You can jump right in, play around with loan scenarios, and it will price it out adequately. You'll see bank statement elite and then a regular bank statement program that the borrower qualifies for. But if your borrower had a bankruptcy or had a foreclosure or any type of a credit event, we'll call it, then they wouldn't qualify for the bank statement elite, because we need a 4-year runway on a bank statement loan with that. With regular bank statement loan, only a 2-year wait on a bankruptcy or a credit event. So different parameters.
So Eric, want to share just a couple more highlights from our elite, and then we'll let Javi go into a little bit of what you covered from a regular program.
So with that said, as you guys can see, there is different requirements to qualify for elite versus a regular bank statement loan program. Guys, we like keeping things really simple here at Angel Oak. Try not to overthink these loans because they're not that complicated. So with that said,
All right, Javi, we're going to go ahead, Javi.
No, I was just gonna say, yeah. I mean, that leads into the bank statement. I mean, I'll go more in depth into the actual bank statement program, because elite, like he said, is for essentially these are great borrowers that they qualify for bank statement, but we don't want to stick them in that box. I mean, he couldn't have said it any better. The bank statement program is really just for those self-employed borrowers that, I mean, they're great borrowers. They just can't qualify for that home that they want, and it's all because they're just writing off their tax returns. It sucks. But that's why we come along, non-QM comes along, and essentially we're going to look at those business or personal bank statements, get that income. And unlike the elite, we're going to have less seasoning requirements. I mean, you'll see it in terms of credit history, housing history. Where elite, you need, I'll go into the credit later, but 0 times 30 for 12 months, we allow housing lates. We allow regular credit lates. So all that stuff we're going to take into account. But as you see there, we go up to 3 million loan amount. It's not just for your small loan amounts. It also qualifies for the jumbos. Any type of bank, self-employed borrower, we go down to 25% of ownership for personal bank statements. So any self-employed borrower that you see, most likely they're going to be taking a hit on their tax returns. They're going to qualify for this. This also leads into a 1099 program, which I know Eric is going to touch up on. And that 1099 program, you guys are going to love that as well. On this program, we allow non-permanent residents. This is just recently, and we go down to a 640 FICO. These are 2 huge updates that we just did to our programs, 2 huge enhancements. So if you guys have questions on this, reach out to your account executive. They'll go more in depth. But as you see here, this is a huge program for you guys to qualify these borrowers that typically wouldn't qualify for that big of a mortgage if they went regular agency conventional.
Yeah, so we already have some questions coming in. Mike was asking, and the next thing we're going to talk about is the 1003. We're going to let Eric talk about what he likes to see on the 1003, what he doesn't like to see on the 1003. We're going to dive deep, but this is interactive, guys. Please use the question queue. We'll get all your questions answered. So Mike is asking, Eric, why don't you take this? Mike's asking, what are the DTI ratios?
So the debt to income ratio, what we want to see is front end 40%, back end 50%. So we have a front and back on these bank statement loans. So 40 front, 50 back end. And we're going to determine what the monthly income is for your self-employed clients for you guys, often doing it same day. All we need is a fully baked 1003 credit report and dump all the bank statements on us. And we sit here with our bank statement review team and we pull what is business income and we're going to disallow what isn't business income. So if somebody sells, an antique car, but they own a mailbox, etc. franchise, well, selling that antique car is not in the normal course of their business, so we would disallow that deposit. But again, Don't overthink it. We do all this for you.
Yeah, and Tom mentioned, the expertise of all of our account executives across the country. Eric, you talked about a fully baked 1003. Tell us, what do you like to see, or what do you and Bob like to see? I always got to put you guys together here. What do you and Bob like to see on the 1003, and what don't you like to see?
Okay, so for those that have never originated a bank statement loan out there, when you're interviewing your client and you find out that they're self-employed and no doubt taking advantage of our 75,000 page tax code we have here in this country, oftentimes they don't qualify for full doc. Listen, full doc's always going to be a better interest rate than a bank statement rate. Bank statement rate's always going to be a better interest rate than a no doc rate if it's an investment property like a DSCR. But getting back to originated on a bank statement loan, you're self-employed. First question to ask, do you own the business 100% yourself? If they're the 100% business owner, traditionally, you're going to want to go with a business bank statement loan scenario. Why? Somebody that owns their own company is running all of their bills through their business. They have really no need to pay themselves. So their car expenses are all run through their business. Anytime they go to a restaurant, they run that bill through their business. All their travel, they're running through their business. Their direct TV cable bill, they can write that off through their business. Everything goes through their business. Why? That reduces their corporate tax consequence as well. So business bank statement. Now you have to own at least 50% of the business to go business bank statement loan with us. Now let's say a borrower, let's say Javi, John, and myself, the three of us own a mortgage company. Well, every month, because we're all three owners, we're going to probably pay ourselves a salary. Well, where are we going to put that money? Probably in our personal checking account. Then maybe every quarter we pay ourselves a bonus, right? So with that, you want to go on a personal bank statement loan because we allow 100% of the deposits on a personal bank statement loan if said borrower also has a business checking account. There's no expense ratio whatsoever, 100% of the deposits. Why? They're simply paying themselves. So the 1003, if they own more than one company, but we're only using one company for income, list the other companies. That builds to the strength of the file. In that 1003 you're sending to us, leave the monthly income blank because we're the ones that are going to determine that for you. But a fully baked 1003, a fully baked URLA, you guys, is the entire loan story. So we get to see how many years have they been self-employed. We need a 2-year runway. We also need to know if they're currently renting, what is that monthly rental figure? Why? One of the 8 pillars of ATR, the ability to repay, all these borrowers have a 3-year statute of limitation to sue their lender for their inability to repay their mortgage. Is this not a great country or what? And that's Angel Oak. So we're going to determine this, but we have payment shock. So if somebody's renting for $800 a month and turns around and wants a $2.8 million loan at a $32,000 a month mortgage payment, well, that's kind of wonky, guys. So we just really got to tread easy. But fill out the 1003 completely and watch how quick these loans are decisioned for you. Either approval, or if we can't do it, we're going to give you a quick no and not drag you through.
Yeah, Eric, and you said the 1003 is really everything we need to know about that borrower. It includes what they have for reserves. And that helps us because 30% of the loans we close, right, we get exceptions on. So there you go. So the better job you do up front, and then I'll throw one public service announcement in here, is, as Eric mentioned, if you know you are going to meet with a self-employed borrower, why not you're going to grab their tax returns because that's what you do. But while you're meeting with that person, grab those bank statements up front, because we see, Javi sees it every time. Oh, now I finally got their tax returns. They don't qualify, and now I have to go bank statements. Why not get those up front? Mm-hmm. Go down parallel paths, one path with Angel Oak, whoever else you're doing your full doc business with for that self-employed borrower. And Eric, you always say this, how many times can you increase that purchasing power using bank statements?
You guys, we haven't officially surveyed or haven't, there's a lot of data that we haven't gathered, but I would guess that it's either twice or 4 times as much of a house that you buy going bank statement versus full doc, what they're showing the IRS. You guys, I can show the IRS that I'm making $68,000 in annual income, turn around and buy a $2.3 million house, 90% loan to value, no mortgage insurance, using bank statements. Think about this. They can buy a lot more house. Might be a lot better investment. Boy, what happens to that realtor's commission when they go from buying a $400,000 house to a $900,000 house? That realtor is going to love you. The borrower finally gets into maybe the community or the school district that they've wanted. You guys, show them what their purchasing power is. As John said, give both their tax returns and then ask for their last 12 months bank statements. Easy. Go online with any bank and you can pull them off just in a PDF. It's not hard.
It's not, Eric. It's really easy. Javi, I know we spent a lot of time talking about the 1003 and a few other things. Javi, talk to us about when you're looking at a credit report. What are some of the things you're looking at, trade line wise? You know, just I know you touched on some consumer credit rates and stuff like that, but kind of when you're looking at trade lines.
Yeah. So actually, before I get into the credit, it's kind of I just wanted to say it's important to piece in the 1003 with that, and I think Eric said a great point there that if we're going to be looking at the 1003 and giving us a complete 1003 is only going to make your process faster when we go through quick qual process and we go through underwriting. Complete 1003 is going to give us the full story, so we don't need to ask questions later because you already gave it to us. And then piecing that together with the credit report, we're going to be looking, obviously your AE is going to be looking at your credit report in depth, trying to see, does your borrower have the trade lines? What do we look for in trade lines? We look to see if they have at least 3 trade lines of 12 months or 2 trade lines of 24 months, right? We look at that. We also look to see foreclosure, deed in lieu, credit event history. We go down to 24 months from the deed date on Chapter 7 and 11 bankruptcy. And from the filing date, 24 months for Chapter 13 on bank statement, which is also huge. All this stuff, we look through a credit report. We're trying to see, can we make this deal work? We want this deal to work for you guys. If it didn't work conventional, send it to us. We want to see if we can make this work. So like I said, in credit, and you're going to want to write it down, two trade lines of 24 months, 3 trade lines of 12 months.
But that's what your account executive's for, right? So Javi, just touch on some. We're getting a lot of questions from people here about buckets. Give us the LTV. Start with the lowest score, what that LTV, all the way up to the highest score, because we've had a few different people asking that question, if you don't mind.
Yeah.
And feel free to break out the matrices because everything's changed in the last week. So
no worries. So if you're looking to do a purchase, you can go down to 640 or cash out. You can also go down to 640. But at a purchase, you go up to 75% LTV, but we go all the way up to 90% with bank statement. And like Eric said, there's no MI on our non-QM products. Now, to get a 90%, you're going to need a 720 on a regular bank statement program, okay? But we can also do cash out for second homes and investments. But for really going 640, which is our lowest FICO, you're going to look at primary investment, primary purchase and cash out. We go down to 640, max LTV is 75, up to 90%, 720 FICO.
Yeah,
That's
Javi,
all right there in our pricing engine. It's also a product eligibility engine. AngelOakMS.com, bookmark it, and whenever you have a deal that doesn't fit agency, FHA, or VA, put it in there, and we'll show you what we can do. We love scenarios.
Eric's jumping ahead. We're going to talk about. We're going to answer a bunch of questions here. We're also going to talk about our 1099. We're going to show you a great tool that Eric's mentioned, our quick quote tool. And then we're going to take you into our marketing portal because you're going to want to market. So let's jump into some of these questions here, Eric. I'll start with you. What if a borrower has 2 separate businesses?
Normally, you're going to see them not only having 2, sometimes 5 separate businesses. What you want to do, it's called the cascade. You want their bread and butter business that has the most revenue. We're going off of deposits, folks. So the business that has the most revenue, we're going to use that first, get those bank statements. If the DTI works, we move the loan along into funding. If we're still shy on income, cascade to the second business, get those bank statements. What is hard for us is if they have more than one business and they're transferring funds paying Peter to pay Paul and there's constantly transfers back and forth. Well, that's very hard for us to determine if the loan is ATR compliant, the ability to repay. So we can make exceptions on that if there's one or two transfers back and forth. And you can kind of, I don't know, detect it. But if it's chronic, that makes it really hard.
Yeah, and if I could just say, you don't need to go through all 5 businesses for their bank statements. Ask them. They know their businesses. They know which ones are going to have the most deposits. So you can just ask them and be like, hey, you have all these businesses. Which 2 make you the most money? And we'll see if we can use both of them.
Yeah, Javi, talk about, we have it up here on the screen about the expense factors. That's a question we received here from one of our attendees. Talk about how we determine an expense factor. I know Eric touched a little bit on personal earlier, so if you don't mind sharing that, please.
Yeah, for sure. So we qualify the bank statements. Of course, we do know that these borrowers do have expenses. We're not blind to it. So we do have to hit them for some expense factor, which for us is going to be a standard 50%. Now, if you call me and you tell me, hey, Javi, this guy, he just works from home. He's a consultant. This guy doesn't even drive anywhere. He just sits at home on his computer. That's all he does. We can actually bring that expense factor down. We could go down to a 15% expense factor as long as you have a third-party CPA, accountant, or tax preparer verify that for us. It needs to be on their letterhead, and we need to make sure that obviously that CPA can be verified, like I said. It says there, some industries with the traditional higher expense factor will be underwritten with 70%. This is only some cases where you'll see kind of a brick and mortar shop that has a lot of inventory. You'll see construction workers. You'll see medical centers with a lot of employees, things like that. But for the most part, most loans are going to be qualifying at 50%. Like Eric said, these bank statements are going to show that much more income, that 50%. You're probably still going to have more than they would have even had on tax returns.
Think about that, folks. 50% profit margin right off the bat. What industry, what business is running on 50% profit margins? You guys, the income's very liberal compared to them going full duck. And again, we do all this for you. Now, Hub just mentioned something, getting a CPA statement. Right now, as we're all sitting here, who in America has a database full of self-employed clients? CPAs. CPAs do not know that these bank statement loans exist. What's a CPA's favorite tax deduction? It's the mortgage tax deduction. We're the only country you can write off the interest rate of your mortgage. Can't do it in Australia, can't do it in Canada, can't do it in Mexico, can't do it in England. We're the only country. So these accountants that have these self-employed clients who are making a lot of money but getting all their imaginable write-offs, they're losing their minds that they're not homeowners taking advantage of the mortgage tax deduction. Folks, that is the little moist nugget out of this webinar you pay attention to. They have a database of clients waiting for you. Go educate them.
And Eric's gonna show you some of the tools that we have that will, when we get to that, Eric's jumping ahead. When we get to that, he's like trying to contain a lion, man. It's fun. So Javi, talk about the difference. Eric mentioned personal bank statements. What's the difference between personal and business bank statements? And Eric mentioned a little early, but we have another question here, and maybe they missed it. Just for the record, this is being recorded. We will get this out to you before noon tomorrow. Again, please use this question queue. We want to get all your questions answered. So Javi, sorry about that.
No worries. So Eric touched up on it a little bit. He actually brought up a great example in which if you have a borrower owns 100% of their business, most likely they're going to have business bank statements that they're going to be qualifying and they're going to be able to send you. But sometimes you'll have a business that has 3 owners to it, right? So they're under that 50% ownership threshold that we have for business. But anyway, most likely if they're doing that, they might be paying themselves salary. And if they're paying themselves salary, we can actually use 100% of their personal bank statements if you give us business bank statements to show that they're actually paying their expenses with that business account. So that's where it really comes into play when you have a borrower that has most of their income coming into their personal statements. And we'll look at those personal statements because also maybe they might not even have a business bank account. Maybe this is a contractor that has everything come into his personal statement, and it might actually lead to our next point of the 1099, in which if they're a 1099 employee, they might be receiving 1099 payments. So we'll be able to go off of their personal bank statements to qualify.
Yeah, and Javi mentioned something about, they pay themselves a salary. Eric, what about a self-employed borrower maybe who's married and their spouse is W-2? Can you use that W-2 income?
100% yes, you guys. We have a lot of ways of finding a yes when it comes to income on an alt income or a bank statement loan here. How about the borrower that's both W-2 and's got a side hustle over here? Yep. We'll allow both of those incomes, both W-2 and bank statements for the same borrower. Now, here's the caveat. You can't have a basket weaving side hustle where you're making $200 a month and have a $200,000 W-2 over here. And so we want to see the side hustle or their self-employment efforts being at least 30%. So if you got a $100,000 a year a W-2 job, we want to see at least $30,000 a year in self-employment income.
Yeah. And Eric, and that's key because a lot of people keep their W-2 job until they get that side hustle going, right? So
or they keep it because of the benefits.
That's exactly it. Yeah. That's exactly it. So Javi, the question here, and so we're having a little technical problems with our question queue. Questions seem to be disappearing, so I apologize if we're not getting to all of them. But one of the questions I do remember was, what if you have declining income? What do we look at like that? And then probably goes into how you're going to answer the question. That's up to us to determine between how many bank statements we use. So go ahead, Javi, answer that, please.
Yeah, correct. So leave it up to your AE when we're going through the quick wall. We're going to go through, don't go into your bank statements looking how much year to year, how much it's declining. First off, if it's declining year to year, we'll go 12-month bank statement. So we'll try to make it work 12 months. That's what we want to see. So if it's 12 or 24 and we see that declining income in 24 months and it goes up over there's a secret formula to it and it's a lot that goes into it. So giving the percentages away isn't going to really work. But I'll tell you, the 24 months, if you have declining income, your AE wants to make this deal work. Like Eric said, we have a million ways to make this deal work and we're going to try to find it. We want this deal to go through. We want your borrower to qualify. So we'll go 12 months instead of 24 months and get that income and try to make it work for you.
Eric's has said this a few times, and Tom mentioned it when he opened here today about you guys are the experts. Our AEs are the experts. Don't overcomplicate it. Let your AE hold your hand and direct you through this entire process. I promise you, you will not be disappointed. So Eric, a couple of questions. Interest only, self-employed people like cash flow. Talk about how our interest only works.
So understand the profile of the American entrepreneur, folks. They're an extremely optimistic a subgroup of Americans. Never in the history of America has a pessimist ever started a business, okay? So they're optimistic. They're risk takers. They take chances. A lot of times, they would have had a bankruptcy. Don't be surprised if you've seen a bank statement borrower who's doing really well has had a bankruptcy in the past. And I don't know if you caught Hobbs, but we can do a bank statement loan for a borrower one day out of Chapter 13 if they filed for Chapter 13 24 months ago. One day out. That's a big group of self-employed borrowers because they get knocked down, but they keep getting back up. They get knocked down, they keep getting back up. So to understand these folks, they're kind of sometimes all over the place. They're not really, I don't know, they're geniuses at their business, but they're not good bookkeepers. So with that said, they might have 4 different checking accounts. Why? I don't know. They may be, we're talked into getting a checking account over here because they got a toaster or something like that. So we call that crop dusting. What we want to focus on is keep it to the bank statement that they have the most deposits going into. I don't know if that answers your question, John.
Yeah, no, definitely, definitely. Javi, we do the pre-qual, right? We're going to tell you, we're going to show you how to submit a pre-qual or what we call internally a quick qual. Will you, Javi, do a pre-qual on a to be determined property?
Yeah, of course. So if they don't have a property yet, I will look at their file still. You give me that 1003 that says TBD. I will look at it and I'll send you that pre-qual. Of course, we can't go into underwriting without a property. It doesn't work like that. There's no TBD approval in underwriting, but I can give you a TBD pre-qual and let you know if this borrower is even going to work at Angel Oak when we go into underwriting.
And
So
Javi,
it's worth pointing out, we're giving you guys on a bank statement loan a full income and credit underwrite right up front in this pre-qual process. So that is a full underwrite. Now, we don't have title yet. We don't have the appraisal. So there's other things that can, derail the loan. But what's the hardest part? Income and credit. We're giving you that full underwrite with inside of 24 hours right up front on a TBD property. Now, your client, and their realtor can now go out there and let the shopping begin.
Yeah, Eric,
and
you mentioned.
That's why. Oh,
sorry.
Go ahead. Yeah,
no.
I was just going to say, and that's why we need a full 1003 and credit report, because like Eric said, the full story, you're getting a full income review and credit review up front, and we're going to try to see if we can make this deal work for you.
Yeah, and it's that self-employed borrower Eric mentioned earlier, maybe 2, 3, 4, 5 times increase in their purchasing power, but it's that self-employed borrower buying those luxury homes out there, right? And we understand at Angel Oak, we understand how valuable not just your reputation is as a loan officer, but how valuable your referral source is from a borrower and a realtor perspective. So we understand that, and that income, I don't know if Eric mentioned it, but that income that gets calculated for you is the income that's going to be used throughout the entire process. So that's the income that the underwriter will use throughout that process. Javi, talk a little bit about, someone's asked about reserves.
Yeah, so 6 months on the subject property, right? When you go to the bank statement elite, it's going to be a little bit tighter of reserves there. But basically, anything over 1.5, you're going to need 9 months. Anything over 2 million, you're going to need 12 months. But again, let your AE look at it. But for the most part, 6 months reserved on bank statements for your subject property.
And subject property only.
Yeah. George, that's probably the biggest. George is asking, what are the most exceptions we get on there? Reserves are probably one of the biggest ones we get as far as an exception on. So, but that's let your AE go to work for you. I'm telling you, that's what they do. That's all they do. As Eric said, we want scenarios, we want pre-quals. That starts the process, and that's how we get borrowers in-house. Couple other things, couple other questions coming in. Chris? No, we don't do construction loans. So the other question was, and I'll answer that because it's usually a hard stop, $150,000 is the minimum loan amount, and that is a pretty good hard stop. Sorry about that. The other one are really loan amount exceptions. Sometimes we'll be able to, depending on the LTV, we'll get some loan amount exceptions. So I know we're about almost 40 minutes past the top of the hour. I know Eric's got an appointment after this. So Eric, let's touch on what our 1099 program looks like a little bit. So just cover some highlights and why you, Javi touched on a little bit why you would go 1099 versus bank statements.
Okay, so 1099 borrowers out there are traditionally, here's the profile. They're working at a company, typically in sales, and they're W-2, and that company hits over 50 employees. Well, they get hammered from a tax position, benefits, so they want to keep their company at 49 employees. So they take their salespeople and go, hey, instead of W-2 now, we're going to 1099 you. So now these are not really entrepreneurs. They're still working for the same company, but now they've gone from W-2 to 1099. So with that said, they have low overhead, and we're going to calculate the income similar to a bank statement loan. It's pretty simple. Try not to overcomplicate it. Now, what if I've just gotten 1099, let's say 18 months ago, and I don't have my 24 months, 2-year runway of self-employment. Well, these are the type of exceptions we make. You guys, what we're doing is we're putting on common sense goggles, and all of these are manually underwritten, folks. What we're doing is there's no DU or LP behind these. These are all common sense. Let's have a look at the entire picture of this borrower and let's find a way to say yes. So if you're not quite 2 years, 1099, we can make exceptions on stuff like that. And again, it all starts, big broker checks into your personal checking accounts out there, folks, all starts with a loan scenario. And John did mention earlier, bank statement loans are typically always bigger loan amounts.
Yeah.
And all you folks out there, you're paid on basis points. So we're here to make sure you're paying attention. Bank statement loans are very profitable for you. Not a lot of W-2 wage earners out there buying a $2, $3, $4 million house. 100% of the time, they're self-employed.
Yeah, go ahead, Javi, please.
Yeah, I was just going to say that, and I'll take what Eric did in the last one. Realtors, hello, this is a great referral for realtors. Realtors not only can refer borrowers to you from this, but realtors themselves are 1099 borrowers.
Yeah.
They qualify for this. That's probably our top, I mean, I don't know the numbers on it, but that's probably our top borrower for the 1099 program, realtors themselves.
Yeah, Javi, 9% of the loans we close underneath the bank statement 1099 program, 9% are actually realtors. So go figure, you get 12 realtors in a room, you're probably going to get one of their loans, right? And you know, everyone's really, really high on artificial intelligence, AI. I started talking about this last month, RI. We've got real intelligence on this call. You have Eric, you have Javi, you have all our experienced account executives across the country. They have real live non-QM. That's all they do, experience and intelligence. They know how to close these loans, and they're not difficult if you just follow their lead. So anything else, Javi, regarding 1099 that you wanted to add, or anything else? Or
No, not for me. I mean, I think Eric said a great point, though, about it's not for entrepreneurs only, neither is our bank statement. This is for self-employed borrowers. So don't just put a bubble over it of entrepreneurs. It's self-employed borrowers.
Yeah, I'm going to touch on a couple of things. We do these on owner-occupied, second homes, non-owner-occupieds. We do purchase, refinance, cash out, and delayed financing. I just wanted to touch a little bit about cash outs. I just read an article this morning that consumer debt has almost hit $1 trillion. That's up from $750 billion in 2021.
Wow.
Start creating your own business. Think about people who are running up a lot of credit card debt and look to do some cash outs for them. So just something to think about, you know, as people, specifically self-employed borrowers, are maybe looking to grow their business in these times too. So, but Javi, let's talk about, again, this is being recorded. We will get this out before end of day today. We have a couple more things we want to cover. We want to cover, as Eric mentioned earlier, our quick quote tool. Javi's going to cover that. He's also going to cover how to get a pre-qual to us. And then we're going to talk about a very exciting thing is marketing, and Eric's going to take us through that. So let's go back to the homepage here, Javi, and kind of direct me through.
And if you could stop right there. Yeah, right there. This is, everybody bookmark it, star it, save it. If you need help on your phone, email me and I'll show you how to create a shortcut on your phone for it. This is your go on the Monopoly board. You could get to anything Angel Oak right here from this spot. So right now we're going to go into the non-QM quick quote. There's 2 spots to reach it. You have right there in the front. You can also go on the top right and you'll be able to see it. If you're zoomed out, you can go to the non-QM quick quote. Right there, you'll see it. So you can go to the non-QM quick quote and price out any deal and submit any quick qual, any scenario to us. So right here, the non-QM quick quote, you'll see it's super simple, guys. We made this user-friendly. We are here for you guys to help you. You'll see the first question is channel type. And John, if you want to input a scenario there so you could see how it works.
And Eric mentioned earlier, we put that bank statement elite out there because it is truly, these borrowers are great borrowers. Our average borrower just throughout all non-QM is about a 740 score, 73% LTV. Those are great borrowers. So we're gonna pick Florida today for because Javi's down in Miami. Sorry, Eric.
Yeah, there you go. So if you want to show them, if you scroll down to the bottom, just how user friendly this is, guys, there's already programs popping up just on what we have there. We haven't even selected a program and you're getting quoted on what you have inputted. So if you want to go ahead and change your program, what you're going to do is you're going to go to income documentation. These are all of our programs. You see, we have a bunch of them. You can select that one, 24 months. There you go. And you'll see based on what we have selected in there, you're going to be receiving rates. And you're going to see we have our par rate there. We have LTV that you requested. And we'll even tell you what's the max that they can qualify for based on their credit score. So we kind of give you a little short summary here of what we need. You see our reserve requirements, housing events. And guys, he just priced it out in 30 seconds. That's how quick it is. And these are real-time rates. We update it daily. We have a great team that does it. So you're not going to break it. So go in there, use it, test out any scenario that you might have and see what rate works. Now, let's say right now you're ready to go. You like this program. You see the bank statement elite. For now, we'll go bank statement. You'll click view rates. And now we give you pricing there as well. We'll show you all the rates that are available to your borrower. What's the cost going to be if they could get a credit? And then right there, if you want to go ahead and select 7.75, that's our rate for today. And you're like, I'm moving forward with this. I want to go to the next step. You're moving forward. Well, the next step is going to be a blank screen. No, I'm just kidding. So sometimes you'll see a blank screen, guys. Don't get scared. It's not your computer. Just scroll up. And when you scroll up, you'll see that's going to be asking you already for your Mismo 3.4 file. Right here, you can upload it, but you don't need it. You can skip it and just press next and go to the next step. All right. And just like this, guys, we are ready to upload. That's how simple it is to price and upload a scenario to us. You'll see down below, it's going to ask you for your account executive. You'll be able to select whoever your AE is. If you don't know, please reach out and we'll get your AE to reach out to you, like John said, the next day. If you reach out that day, they'll probably be reaching out the same day because that's the way our AEs are. But right here, you'll see it's simple, drag and drop. It's not difficult, guys. We make it easy for you. You'll see we even star what's needed, and all you'll see starred is a 1003 credit report and bank statement. That's all we need for a quick qual on this, and we'll be able to pre-qualify your borrower.
Yep. And then Javi,
the bank statement questionnaire.
Account executive, right? And probably within minutes after that coming to the account executive, they're forwarding on those bank statements to a team of experts. This is a team of experts. And I talked about AI, and we use AI to help calculate, and then the team verifies. So, so this is done, our AEs, they're the best in the business. That's all I can say. They know how to get deals done. And then, Javi, it's usually dependent upon if there's any additional information. What is it, 24, 48 at worst case?
Yeah, and also you'll see here, if you scroll up, you're going to see a section asking for a questionnaire. That's going to be our Angel Oak Business Bank Statement Questionnaire. If you click that blue button, you'll be able to download it. Just send this to your borrower. We're going to get some simple information about their company to understand what it is that they do and see their business. And sometimes if we see that their expenses aren't qualifying, this is how we'll know what they would qualify for. We're going to get to know their business, their website, and things like that.
And you can fill it out for your borrower. We do not need it signed by the borrower or a CPA at this pre-qual. Fill it out for them. We just need to know what their ownership percentage is primarily.
Yeah, so that's easy. And everything, like I said, is done from our website here. So, and this is going to be, conversations you're going to have, and our AEs are going to hold your hand throughout that entire process because they know it inside and out. So, Eric, we always talk about, we're about 10 minutes to the top of the hour. We always talk about how, I hear, you hear it, Javi hears it. We hear about loan officers saying, oh God, my business isn't as good as it used to be. you know, God, 75% of you have not closed a bank statement loan in the last 12 months. Eric's going to teach you how to go get that business. So let me log in here, Eric, and I'll let you direct me through the portal here. Sorry.
And this is simple stuff. So everything that we've showed you so far, you didn't need a password, didn't need a login. Now we're going into our portal. As an approved broker, you have access to all of this marketing firepower. So he's going to go to that marketing portal tab right there.
What do you want to go flyers first, Eric?
Please. So to make a customized flyer, let's go to the CPA flyer.
I love it. Yep.
So again, who's sitting on a database full of self-employed clients who are not homeowners? CPAs. If any of you on this call, I think there's 79 folks on this webinar. If you use an accountant, go let your accountant know with this marketing flyer and have your accountant literally refer his self-employed clients to you for their luxury real estate purchasing. Now, you imagine having 2, 3, maybe 4 CPAs referring all their self-employed clients to you over the next 2 or 3 years. What's that going to do to your personal checking account? So with this, all you have to do, instead of Neil Patel right there, John, just put in John Jeanmonod.
Well, hey, Eric, it was funny. I was at an event the other night, and it was the a person I was talking to. She was a CPA and a loan officer, and
So what's the
she never
changes?
heard of it. She never heard about a bank statement loan. So to
Oh,
your
no, they don't know, you guys. In their 2 days of ongoing education to maintain their CPA license, they're not taught about the ATR regulation. They're not. They think alt income is the root of all evil, and that's what caused the financial meltdown 10 years ago. All the stated income loans. That's how they kind of group these. It's just simply educating them that these are their clients have a 3-year statute of limitation to sue the lender for their inability to repay their loan. Once they understand that, all of the risk kind of just the curtain comes down, and now they want the best for their clients. So as you can see, when John just put his name there, you see the flyer right there now says John Jeanmonod. And by the way, John, go to other flyers. And now, once you filled out this information on the left, all of these flyers are now available to you and customized. So let's go to maybe an item.
I'll go to a regular bank statement, but Eric, like you said, you fill it out once, it populates for every flyer we have out there. So we try to make it easy as possible. As you can see, my name still is there for this flyer.
That's it. And if you need any help with this, contact us after this. You guys call us. You'll have our contact information. We're here to make you money.
Yep.
Now, these flyers are kind of nice. And why are they nice? When you're meeting with somebody, it gives you something to leave them with your contact information on. Or what's also really nice is to take these flyers and take something like this. Probably see it's a roll of tape, right? Keep flyers in this tape in your car, and anytime you're going by a real estate office, take said flyer, customized flyer that you pulled down here, and tape it to the refrigerator of that break room that those realtors use. Watch, you will get calls on bank statement loans. How do I know it works? Because I've done it myself.
Hey,
It's easy.
Eric, there's an intelligent account executive out on the West Coast that says, how do you find self-employed borrowers? And what does he say?
How do you walk out of your front door and not trip over them? Goodness. Anytime you go to an independent restaurant, what's your favorite restaurant? No doubt somebody is self-employed running that. Now you're a customer. How about, hey, is the owner here? Yes. Hey, I want to let you know I come to this restaurant all the time. I think the food's delicious. You're knocking it out of the park. By the way, are you a homeowner? Oh, yeah? Are you in your dream home, or is there a house that you'd rather have? Oh, yeah? Talk to me. Folks, they're everywhere.
And Eric,
everywhere.
he kind of, you can tell he's passionate about it, but they literally are everywhere, whether it's a strip mall or any, but he's serious. I mean, he presents in a great way, but he
Yeah.
is so serious about this, guys. You can find self-employed borrowers anywhere you look and it's the fastest growing segment of the workforce out there. So
4 times the size of the VA market. There's 56 to 57 million self-employed Americans out there, whether it be they own 7 companies or they've got a side hustle 1099 going. That's over 4 times the size of the VA market. Folks.
So Eric, I want to be conscientious of your time and the people on our call time. Let's talk about a little bit about social media posts.
You guys, it's simply a matter of education. That's it. You want to make a ton of money in this down market while everybody's crying in their soup. You want to build a pipeline of self-employed borrowers. Educate. We have already pre-written social media, even templates that you can just add to what we've already written, put your flair, put your personality to it. And we have 6 months worth of social media posts already designed for you. We have white, and it's all white label, doesn't say Angel Oak anywhere on this stuff. It's all your branding.
Yeah, Eric, it's kind of, this is where I turn from maybe a little, enthusiastic to a little frustrated because, and you've always said this, now do it later. This has already been developed for you, these flyers, these social media posts, and then people, they're afraid of change. I'm telling you, try it, it will work. And then Eric, let's talk about, the presentation that you, Javi, and myself love doing the most.
Folks, we have local AE representation for most of you guys out there. Maybe not in the middle of Billings, Montana, but certainly in any major metropolitan area, there's an Angel Oak account executive to go do joint realtor presentations with you. We've already completely refined these PowerPoint presentations to realtors to educate realtors about bank statement loans, and let us go out there and help you guys build your pipeline. That's what we're here for.
Yeah.
And John, if I could just say, I mean, I don't want to shout out to my Montana loan officers. Guys, if you are out there and you don't have a local AE, we do have inside reps that I work with. That's what I do. We will do Zoom presentations for you. Even if we're not localized right in your specific city, we will do a Zoom. I've done a million Zoom realtor presentations for you guys. I join via Zoom. You put me on your big screen TV in a conference room, and I will sit there and I will talk non-QM to your realtors, and I'll sell the product for you. It won't be my product. It'll be your product, and I'm just your lender here to help.
So here's an example. I think we had George on this. He's asked a couple of questions. So I'm going to use George as a loan officer. Eric, Javi, myself, we go in or we present via Zoom, and we go in there and say, hey, we're just one of George's investors, right? Don't say anything about Angel Oak. We just say we're just one of George's investors. George has access to other programs, but we're just going to talk to you about the programs George has available to him via us as an investor. Nothing about Angel Oak. So you don't even have to know the content that in depth. We will present it on your behalf, and everything goes back to George. We're going to talk about bank statements. What are you going to do when you have a self-employed borrower? You're going to call George. What are you going to do when you have a debt service coverage ratio borrower? You're going to call George. That's how the presentation goes. Eric, I want to be very conscientious of your time, everyone else's time. Javi, give us something to close on here, Javi.
Yeah, so I don't know if you got it from what we've said, but I think the biggest takeaway is talk to your AE. Your AE is here to help you no matter where you are. You have an AE. They are waiting for you. They are trying to reach out. If you're not getting our emails, just know your AE is here to help you, and we're here to make your deal work, okay?
Yep. Eric.
And if you're interested, I have marketing tactics that work right now in this current marketplace. If you're interested in a deeper dive, contact me. I'll walk you through them. Yeah. We're here to make you money.
So thank you, Eric. Thank you, Javi, again, for taking the time out of your day. Thank you, everyone, for attending today. If you've closed a loan with Angel Oak, we really do appreciate your business. If you have not, give us a shot. You can tell by the power of Javi and Eric, that we're really here motivated to help you close your borrower's loans and shine for all your referral sources. So have a great afternoon. This is being recorded. This will be sent out as a survey afterwards. Anything we could do better, please share with us. Thank you, everyone. Have a great day. Eric, Javi, thank you.